Okay, quick update on just a few of our various portfolios. Now, the portfolios are created as models from the filtered list. Okay, this is going through 10,000 equities, US, European, UK, and then building them based upon what clients want in terms of returns versus drawdowns, risk, volatilities, and so on. And sometimes clients will say, well, I don't particularly like this company, so I don't want that in a model. So all the models are bespoke. But anyway, to give you an example of just some of them in comparisons, this is where we've got to. I'll move myself there for a second. I'll show you more. So the 45 plus so far this year is up 13%. Now, all of this assumes you're just sleeping at the wheel. All of this assumes that even in a year like 2022, you don't exit. So forget daddy bears and all of that. You're just sleeping at the wheel. You could call that the worst case example or the best case, depending on your views on markets. So these are not traded, as in you're not going in and out, and thinking you've got a crystal ball. For comparison purposes, I've put the S&P 500 here and the UK All Share. Now, I want to talk about the S&P and the FTSE All Share for a second for this reason. Unusually, the All Share has done better than the US there. Generally, it tends to be half as good, albeit there are some exceptions like 2022. It's because of 2022 that your wealth advisor will use that as an excuse. Well, you don't want the volatility. It's better not to be in American equities. But however, you can see year after year, the Americans tend to do significantly better with relatively few exceptions, at least twice as good. Okay? So I wanted to draw that attention. Let's now look at some of the US exchange traded funds. These are for American clients. UK ETFs are here. Remember, if you're in the UK, you usually can't buy US ETFs, and similarly, if you're in the US, UK ones you wouldn't be interested in anyway. That's a generalization. That doesn't mean you can't. When I say US ETFs, I mean those outside of European regulation, UCITS regulation, and so on. You can buy a US basket of stocks as long as they're listed in under European regulations. So you can have US coverage through exchange traded funds in the UK. It's just that you can't have exchange traded funds that are listed in the US. I know it sounds complicated. Now, US exchange traded funds for US clients, that's how that's done, which is all well and good. Oh, and by the way, in case you're wondering, well, wait a minute, why have you not got 2016 here and so on? Because some of the companies in the Quality 5 Plus didn't exist back then. And we think that's pretty good coverage. I also want to draw to your attention the volatility of returns. Look at that. You can go from 1 or 7 to this. The other point is intra-year, of course, you could get significant dips. That's just what's happened by the